Are you curious about the world of business and how it operates? Do you want to understand the financial side of running a company? If so, you may have come across the term managerial accounting. But what exactly is managerial accounting and how does it differ from other types of accounting? In this blog post, we will break down the concept of managerial accounting into 7 easy ways for a third-grade reading level. By the end, you will have a better understanding of what is managerial accounting and how it can help businesses make important decisions. So let's dive in and explore 7 easy ways to grasp the concept of managerial accounting. The meaning of managerial accounting: imagine you're a captain of a ship. You need to know how fast the wind is blowing, what direction you're heading, how much fuel you have left, and what obstacles might be in your path. Just like a captain, managers in a business need specific information to guide their decisions and navigate their company towards success. That's where managerial accounting comes in. Managerial accounting, often called management accounting, is like the compass, map, and weather forecast for a business. It involves identifying, measuring, interpreting, and communicating vital information that managers need to achieve the company's goals. This process is much more than just adding up numbers. It's about transforming data into a powerful tool for decision-making. But what kind of information does managerial accounting provide? Think about the costs of producing a product, the revenue generated from its sales, and the expenses associated with its marketing. It also includes predicting future trends and analyzing the financial health of the company. This valuable information serves as a guide for managers. It helps them to plan the company's future, control its operations, and make decisions that affect the entire organization. For example, if the cost of producing a product is too high, managerial accounting can help identify where cuts can be made to improve profitability. Or, if a marketing campaign isn't bringing in enough revenue, the information can help decide whether to tweak the campaign or scrap it altogether. So, in essence, managerial accounting provides managers with the insights they need to run the business effectively. It turns raw data into valuable information, equipping managers with the knowledge they need to steer their company towards success. Just as a captain couldn't sail without their compass and map, a manager couldn't effectively run a business without managerial accounting. Continue reading to learn more about 7 easy ways to grasp the concept of managerial accounting. Planning and budgeting using 7 easy ways to grasp the concept of managerial accounting. Planning and budgeting. Let's picture a business as a ship once more. Just as a ship needs a well-thought-out route and an ample supply of resources for a successful journey, a business also needs a detailed plan and a properly allocated budget to flourish. This is where managerial accounting takes the helm, acting as the captain's trusted advisor. Through managerial accounting, a comprehensive map for the future can be plotted. This map, or business plan, isn't just about setting goals, it's also about laying out the steps needed to reach those goals. It's about determining what resources are needed, where to get those resources, and how to best use them. And with managerial accounting, this plan is drawn up based on concrete data, not just hopeful speculation. Alongside this plan, managerial accounting also helps in creating a realistic budget. Think of the budget as the ship's store of food and water. You need to ensure it will last the entire voyage. To make a budget, you need to understand the costs tied to each activity your business undertakes and the value that these activities generate. You need to know what's going out and what's coming in, and ensure there's a healthy balance between the two. The budget isn't a set-in-stone document, either. It can and should be adjusted as conditions change, much like a captain adjusts his course due to changes in wind or tide. Managerial accounting helps monitor these conditions. It tracks costs, measures performance, and forecasts future trends, providing all the information needed to make the necessary adjustments to the budget. Read more of 7 easy ways to grasp the concept of managerial accounting. Performance evaluation using 7 easy ways to grasp the concept of managerial accounting. Performance evaluation. Just as a captain reviews his journey once the voyage is over, managers too need to assess how their company is doing. This is where performance evaluation, a crucial aspect of managerial accounting, steps in. It's like a mirror that reflects the company's journey, allowing managers to see whether they're on the right track or if they need to change direction. Performance evaluation uses accounting information to measure whether the company is achieving its set goals. It's much like a report card for the business. And just like in school, getting good grades is crucial. A company with good performance metrics shows that it's doing things right. Metrics such as sales growth, market share, and profit margins are often used as indicators of success. These metrics, however, are not just numbers. They tell a story about the company's journey. For instance, an increase in sales growth could indicate that customers love the company's products. Or a shrinking market share might signal that competitors are gaining ground. By interpreting these numbers, managers can identify strengths and weaknesses in their strategies. But it's not just the company's performance that's under the microscope. Individual employees, departments, and projects also get evaluated. This helps managers recognize high performers, identify areas where improvement is needed, and decide where to allocate resources. Performance evaluation also enables managers to correct course if needed. If the company is not meeting its targets, managers can use the information from the evaluation to understand why and to make changes. This could involve revising strategies, changing processes, or even redefining goals. On the other hand, if the company is performing well, the evaluation provides an opportunity to celebrate successes and motivate employees. It can also offer valuable insights that can be used to replicate success in other areas. If you want to learn more, continue below with 7 easy ways to grasp the concept of managerial accounting. Cost accounting using 7 easy ways to grasp the concept of managerial accounting. Cost accounting. Think of cost accounting as the ship's logbook in our ongoing business as a sea voyage analogy. This aspect of managerial accounting is akin to meticulously noting down every single detail about the ship's journey. It records the type of waves encountered, the speed of the wind, the ship's speed, and even the amount of food consumed each day. In a business, cost accounting is all about keeping a close eye on the costs tied to every single activity the company undertakes. Cost accounting scrutinizes the money spent on producing a product, marketing it, delivering it to customers, and even the costs incurred for administrative tasks. It's about understanding the monetary resources consumed during every step of the process and how these expenses impact the company's bottom line. Imagine you're planning a feast for the ship's crew. You'll need to know how much each ingredient costs, how much you'll need of each, and what other expenses might be involved, like cooking fuel or utensils. Similarly, cost accounting provides managers with a detailed breakdown of the costs involved in each business activity. This information is crucial in helping managers control costs and enhance profitability. For instance, if a product's production cost is too high, cost accounting can identify where the highest expenses lie. This allows managers to find ways to reduce these costs, perhaps by finding cheaper materials or streamlining the production process. Cost accounting also plays a vital role in setting the selling price for products. By understanding the total cost of production, managers can ensure that the selling price covers these costs and generates a healthy profit. Cost accounting isn't just about penny pinching or cost cutting, though. It's about wisely allocating resources and ensuring the company is getting good value for the money it spends. It's about recognizing areas where investment could lead to increased efficiency or better quality, ultimately benefiting the company in the long run. 7 easy ways to grasp the concept of managerial accounting has a lot of great content. Please continue below. Decision-making using 7 easy ways to grasp the concept of managerial accounting. Decision-making. Imagine being at the helm of a ship again. There are important decisions to make at every turn. What route to take? When to sail? When to dock? These choices could mean the difference between smooth sailing or rough seas. Now, think about being in charge of a business. The decisions here could impact the success or failure of the organization. This is where the magic of managerial accounting comes into play. Every decision made within a business, big or small, has financial implications. These decisions could involve choosing a supplier, launching a new product, expanding to a new market, or even hiring new employees. But how does a manager know what decision to make? Well, they need information. And not just any information, they need accurate, relevant, and timely information that can guide them towards the best decision. This is exactly what managerial accounting provides. For example, consider the pricing of a new product. How do you decide what price to set? You can't just pick a number out of thin air. You need to consider the costs involved in producing and marketing the product, the price customers are willing to pay, and the pricing strategies of your competitors. Managerial accounting helps gather all this information and more. It helps managers weigh the pros and cons of different pricing options and choose the one that maximizes profitability while ensuring customer satisfaction. Or consider deciding whether to embark on a new project. Is it worth investing in? What are the potential returns? What are the risks involved? Managerial accounting helps answer these questions. It uses techniques like cost-benefit analysis and risk assessment to evaluate the feasibility of the project. It helps managers understand the financial implications of the project and decide whether to go ahead with it or not. Investment decisions using 7 easy ways to grasp the concept of managerial accounting. Investment decisions. Steering a ship into new, uncharted waters can be thrilling, but it's also a decision that shouldn't be made lightly. Similarly, investing in new projects or ventures is a big step for any business. These investment decisions are like a compass guiding the business into the future, opening up new paths for growth and expansion. But how does a business decide where to invest? Here's where managerial accounting plays the role of the astute navigator. With managerial accounting, managers can analyze the potential return on investment, ROI, of various projects. Just as a ship's captain uses maps and compasses to decide the best route to take, managers use techniques such as net present value, NPV, and internal rate of return, IRR. These techniques help managers assess the profitability of potential investments, enabling them to make informed choices. Consider NPV as a lighthouse, illuminating the projected financial benefits of an investment. It calculates the present value of the projected future cash flows from the investment, subtracting the initial investment cost. If the NPV is positive, it suggests that the project will generate more cash than it costs, indicating a potentially profitable investment. IRR, on the other hand, is like the ship's speedometer. It calculates the annual return that an investment is expected to yield. If the IRR exceeds the business's required rate of return, it indicates a promising investment that could boost the company's growth. Managerial accounting also helps managers to consider risks associated with investments. It's much like a lookout scanning the horizon for potential storms. By identifying and evaluating potential financial risks, managerial accounting helps managers make prudent investment decisions. The importance of managerial accounting. Using 7 easy ways to grasp the concept of managerial accounting. Conclusion. The importance of managerial accounting. Just like a seasoned captain who skillfully navigates his ship to its destination, managerial accounting is an essential tool that guides a business to its goals. It sheds light on the financial implications of every decision, assisting managers in making the best choices for their organization. From outlining the path for the future to assessing performance, from detailing costs to making critical decisions, managerial accounting is an indispensable aid. Think of it as the keen eye observing the ship's every move, the compass pointing the way, the logbook chronicling the journey, and the navigator guiding through uncharted waters. Managerial accounting embodies all these roles, providing key insights that empower a business to flourish. It transforms raw data into meaningful information that is both actionable and beneficial. But it's not just about numbers and calculations. Managerial accounting also involves interpreting this data, drawing out its underlying story. It reveals the company's strengths and weaknesses, its successes and challenges, its opportunities and threats. This narrative aids managers in comprehending the current state of their business, envisioning its future, and steering it towards success. In essence, managerial accounting equips managers with the knowledge and insights they need to effectively run their business. By providing accurate, relevant, and timely information, it ensures that managers are well informed and well prepared to tackle any situation. It helps them control costs, enhance profitability, assess performance, and make prudent investment decisions. The importance of managerial accounting, therefore, cannot be overstated. It is the backbone of effective business management, a key component of any successful organization. So, embrace the understanding of managerial accounting, and you'll not only comprehend the workings of a business but also gain the tools to guide it towards success. Just as a ship cannot sail without its captain, a business cannot thrive without managerial accounting. If this video helped you understand accounting a little better, don't forget to like, share, subscribe, and turn on notifications for more accounting tips and guides. See you in the next video.